Ever feel like the stock market is a wild roller coaster ride? One day it's up, the next day it's down, and trying to time the perfect moment to invest feels impossible. But what if I told you there's a way to invest without worrying about timing the market? A strategy that smooths out the highs and lows over time? It's called dollar cost averaging, and it's one of the simplest, yet most effective investing strategies for reducing risk. Stick around, because in the next few minutes, we'll break down how this strategy works, why it's so powerful, and how you can start using it today. Let's dive in. Dollar cost averaging is a strategy that can make it easier to deal with uncertain markets by making purchases automatic. It also supports an investor's effort to invest regularly. Dollar cost averaging involves investing the same amount of money in a target security at regular intervals over a certain period of time, regardless of price. By using dollar cost averaging, investors may lower their average cost per share and reduce the impact of volatility on their portfolios. In effect, this strategy eliminates the effort required to attempt to time the market to buy at the best prices. Dollar cost averaging is also known as the constant dollar plan. How dollar cost averaging works. Dollar cost averaging is a simple tool that an investor can use to build savings and wealth over the long term. It is also a way for an investor to ignore short-term volatility in the broader markets. A great example of long-term dollar cost averaging is how it works in 401k plans. Employees regularly invest a set amount from their paycheck, no matter the investment's price at the time. They decide how much to contribute and choose from the investment options provided by the plan. The money is then invested automatically every pay period. When prices are high, they buy fewer shares. When prices are low, they get more shares. Dollar cost averaging can also be used outside of 401k plans. For instance, investors can use it to make regular purchases of mutual or index funds. It is one of the best strategies for beginning investors looking to trade ETFs. Additionally, many dividend reinvestment plans allow investors to dollar cost average by making purchases regularly. Benefits of dollar cost averaging. Lower costs. Dollar cost averaging can lower the average amount you spend on investments. Consistent growth. It reinforces the practice of investing regularly to build wealth over time. Automatic investing. It's automatic and can take concerns about when to invest out of your hands. Avoid market timing. It removes the pitfalls of market timing, such as buying only when prices have already risen. Always invested. It can ensure that you're already in the market and ready to buy when events send prices higher. Emotion-free. It takes emotion out of your investing and prevents you from potentially damaging your portfolio's returns. Who should use dollar cost averaging? The investment strategy of dollar cost averaging can be used by any investor who wants to take advantage of its benefits, which include a potentially lower average cost, automatic investing over regular intervals of time, and a method that relieves them of the stress of having to make purchase decisions under pressure when the market is volatile. Dollar cost averaging may be especially useful to beginning investors who don't yet have the experience or expertise to judge the most opportune moments to buy. It can also be a reliable strategy for long-term investors who are committed to investing regularly, but don't have the time or inclination to watch the market and time their orders. However, dollar cost averaging isn't for everyone. It isn't necessarily appropriate for those investing time periods when prices are trending steadily in one direction or the other. It's important to note that dollar cost averaging works well as a method of buying an investment over a specific period of time when the price fluctuates up and down. If the price rises continuously, those using dollar cost averaging end up buying fewer shares. And that's it for today. If you enjoyed the video, don't forget to like, comment, and subscribe. Hit the notification bell so you never miss an update. Thanks for watching, and we'll see you in the next one.